How to start investing in real estate in 2023. You couldn't buy a home when rates were low and they were cheap. Now that rates are higher and there are fewer buyers, the market has changed. Everyone is upset about that, but I'm not one of them. I'll just try to play the game in a way that helps me win. You get some cash flow, you move into areas with limited supply and very high wages that are going to go up, and you get the best of both worlds. I'm going to do something creative as I start over and build my portfolio from scratch. This hero's journey has begun, and he has decided not to quit or give up, but in this episode, he has to start from scratch. You'll find out what he will do and how this will happen. Alright? That may be a bit dramatic, but I'm trying to figure out what I would do if I had to start investing in real estate all over again and build a new portfolio in 2023. So let's try to talk this through. Okay, so I've lost everything, or maybe I just turned 18 and I'm like, hey, I've got bright skies. Well, I guess I won't be looking at bright skies right now. There are a few problems with the market. When I start over with my portfolio, there are a few things I want to keep in mind. Do well. The first is how the portfolio is put together. I probably don't want to grow in just one type of asset. I don't want all of them to be for a short time. I don't want all small, multifamily homes. I don't want a bunch of big multifamily rentals or a lot of single-family rentals. I don't want to only own trailers or sites for glamping. I like having a mix of different assets in my portfolio because I like the idea of reducing the risk of some asset classes and making some areas stronger. For example, I know I'll make the most money if I buy a house in Malibu, California, or Beverly Hills, California, or the best neighborhood in Manhattan, New York. Long term, the value will go up a lot, which is great, but I'm probably going to lose money every month while I build up equity. So what do I do? Do I risk losing everything I own? Just put everything on equity? No, I'll need to do other things to keep me busy while I wait for that equity to grow and the market to move in that direction. So I'm going to buy some assets that bring in money to help me get by. But those will make me wealthy. I'm not going to blow it up because of these duplexes or triplexes in Wichita, Kansas. They may be very, very reliable and give me money every month, but they'll never be worth $1 million or more. So I mix them together, you get some cash flow, you go into areas with limited supply and very high wages that are going to go up, and you get the best of both worlds. That's what I mean by the architecture of a portfolio. So I'm going to think a lot about how to add a variety of assets to this portfolio. I want some short-term rentals that will bring in a lot of money. But you get too many of them, you hate your life, and you spend all your time dealing with them. So then I want to add some other things that don't take as much work. I might want to put money into someone else's syndication. Maybe I want to buy a property with more than one unit and let the property manager handle the business stuff. I might want 1 or 2 triple nets. I'd think about it as I moved toward 2023. I'd also think about where I was living, right? It's hard to get into a market that's already been pushed up too high or that's become too full recently. I put money into South Florida, and these are really good buys. But I'm afraid that a lot of other people have already invested in South Florida, so there's a lot of competition for those properties, which wouldn't be the case in some other markets. So going into 2023, I don't just look at where people are moving and where they are going, I also look at where other investors are putting their money. So I don't want to buy in a place where there are a lot of short-term rentals and not enough people who want to rent them. That wouldn't be good. I do like where certain places are going in 2023, but you probably aren't thinking about them. These are places like Idaho where people move from California, but it's not super cool and trendy for investors to buy there. But the value of Idaho real estate has been steadily going up, and that's not likely to change because wealthy people from other places like the way the state is run and the way it looks. I mean, Montana has always been a joke to me. I've been laughing at it for most of my life. My dad has always wanted to move to Montana because he liked to hunt, fish, and be in the great outdoors. I always thought it was a backwards place with a bunch of hicks, but now that I've seen some pictures of Montana, I've changed my mind. I think more and more people will move to those areas now that social media and the internet have made the world smaller and we can see what life is like outside of our own little bubbles. There are some amazing places where more and more people will move as their jobs become remote or they retire. I would also think about buying a home in a unique place, like on a lake. Now, I'd be very careful that the lake where the house I want to buy isn't losing water. Every year, droughts like the one in California happen in some parts of our country. In other places, it rains a lot. So I wanted to buy in a place where I knew the lakes. I don't know how they measure water, but the amount of water that lake has would stay the same. But I think people are realizing that they can't live on the beach more and more. On the ocean, they can't live. Well, all they want to do is be near water. They are going to move into lakefront homes and spend their vacations there. I would be putting the portfolio and vacation homes back together. I need to focus more on that and maybe less on the fact that I'm going to buy a property, condo, or unit in a big city where people travel for business as I build my portfolio. I will also look at more than just vacation rentals. I'm going to look at useful things like professional travel rentals. So, this would be like what we usually call traveling nurses, but there are a lot more professionals than just nurses. Travel nurses are probably the biggest asset class, and there was a lot of demand after the COVID situation. If you don't talk to traveling nurses, you probably don't know how much money they make. They're crushing it as traveling nurses, and they deserve this money. Get paid a lot of money to move to new hospitals and learn new systems, software, and co-workers, but their lives aren't great because they're always away from their families. Is there a group of hired guns working on the front lines? Everyone who works as a nurse likes to preach. Someone needed to say it, because it's very true. This isn't something that gets talked about very often. We don't talk about them when we talk about first responders. When we talk about innovative geniuses who are changing the game in the text-based, we're talking about people who are very important, get paid well, and often have their rent paid for by the hospital where they work. So I think that finding ways to help those people by giving them a great place to stay should be part of my portfolio as I rebuild it for 2023. I wouldn't just be thinking about great places to go on vacation. I would think about designing amazing literal units and properties for professionals who travel for work and need a place to stay close to where they work. Now, the fact that you need money to buy real estate is a big part of the process. So let's talk about how I'll pay for these deals as I move toward 2023. First of all, rates are likely to stay higher in 2023 than they were in the past. So the value of the assets will go down, but the rate of interest will go up. So your payment might be even higher than when the asset was really expensive. And this is just something wrong with the way people are. You all know that when interest rates were low and homes were cheap, you couldn't buy one because there were 12 offers on every house. Now that rates are higher and there are fewer buyers, everyone is upset. But I don't complain. I'll just look at how the game works and how it helps me. So if I can buy a property for less money at a higher rate, that's better. But I know that they will probably go down at some point, allowing me to refinance. Well, when I refinance, I get the best of both worlds, a lower interest rate and a more affordable house because I paid less for it. I was also able to buy the properties because 12 other people weren't bidding up the price high that I couldn't get them at all. So I'm very optimistic about 2023 and the fact that as an investor, this is a better market to move into. But how will you get the money to buy the homes? Well, first of all, I'm going to save as much money as I can. Capital is either energy or a place where energy is stored. When you keep money in the bank or in your wallet, you're just storing the energy of the work you did to get that money. So if you want to work for 8 hours, you get paid a certain amount of money. The energy you put into that 8-hour day is stored in that money. You had to give up time with your loved ones, your hobbies, or the things you like to do. Instead, you had to go to work. You feel like you made a sacrifice for that money, right? So I want to be able to carry as much of that sack as I can. I don't want to put it in real estate, or if I do, I want to put less money down and borrow more from someone else. I'm going to house act at least one property a year, and I'm going to start an FH, either a loan or a regular loan at 5%. I'll put down between 3.5 and 5%, and I'll keep as much of that energy as I can. And if I want to invest less money, I still have to pay for the property. The money has to come from somewhere else. So, as I work to rebuild my portfolio, I'll think about what kind of loan products would be best for me. Now, I've already said that I'm going to house act, and that it will be a regular loan with 5% down or an FH, a loan at 3.5. Or, if you are a veteran, a VA loan with no down payment, which is great. But if I'm buying real estate as an investment and I have to put down 20% to 25%, I'll probably use conventional loans when I can. But as my business grows, I can't always use traditional loans because they become a huge hassle. So what I'm going to do instead is use creative things that aren't QM, like a D. A debt service coverage ratio is a part of an SCR loan. In this case, the lender looks at your property as if it were a business, which is similar to how commercial lending has been done for a long time. I use these loans all the time now, and I'll keep doing so in the future. It's a lot easier and less stressful for me to gather all the paperwork, and they look at the property and make sure it's going to bring in money. And if it does, they give me a loan based on how much cash is coming in instead of how much I make at my job. I can also use this. I can still buy properties even if I want to quit my job or work less hours because I don't want to be tied to it. You don't have to worry that if you quit your job, you won't be able to pay your bills. This is a much better way to do it. I'm going to look into creative solutions like bridge loans. I often get these loans when I buy a house and then need money to fix it up. My rates are a couple of points higher than they would be normally. But once the property is stable, I sell it and get a new loan with a fixed rate for 30 years. Now, this can be helpful because some of the best deals you'll find will be in such bad shape that you can't buy them with traditional financing. But you can buy it with a bridge loan. So, what happens is that all the other buyers who aren't using a bridge loan don't know about loan products like the ones I'm talking about right now, so when they write an offer, it has to be cash, and they think that's it. But you're smart because you're listening to people with more money. You contact me, and I put you in touch with my friends at One Brokerage. We help you out, and there's a bridge option that isn't cash or nothing. Most of the time, you can use this financing to buy the house, borrow money to fix it up, and then refinance. I recently saw something else that I think is pretty cool. We offer 40-year loans instead of 30-year loans. So instead of just getting a 30-year fixed rate, you can refinance into a 40-year fixed rate. This will increase the amount of interest you pay over the life of the loan, but you will save money on your monthly payment, which will increase your cash flow. So, Depending on my situation or the property, that's another option I might look into if I'm starting from scratch and want to get the most cash flow out of this property. Starting over, I'm going to do something creative that you might not have thought of. I'm going to change my career from being a W-29 to 5 worker to something else. Maybe I work in healthcare, maybe I work in accounting, maybe I do something I don't like and I really want to work in real estate instead, because we all love real estate. You wouldn't be listening to me if you didn't like real estate. I'm going to look for a way to make more money in the real estate field by becoming a real estate agent, a loan officer, an escrow officer, a contractor for a construction company, an administrative assistant in one of these types of companies, getting into property management, design, or consulting. There are so many ways to make money in real estate. Even if you're good at math, but just like real estate, you can get a degree as a bookkeeper or become a CPA. And use real estate to help other people save money on their taxes. You no longer have to choose between working full-time in real estate or in W-2. Now you're in a good spot where you're learning about real estate and making money at the same time. You'll learn more quickly than other people because you work in the industry by hosting a podcast, and this is a trend. I've noticed that when we've asked some of the wealthiest people we've talked to how they got into real estate, they've given the same answer. People told me I was a CPA. I did taxes for people who had a lot of money. I saw that all of their money came from real estate, and then it hit me, real estate is where you can make a lot of money. People who worked in real estate were exposed to it, and then they talked to their clients, who put them in touch with the right people. They were able to build wealth quickly because they had all the right tools, which brings me to my last point. When I'm building my portfolio, I want to be around the right people. It's not about going on Zillow and looking at houses, it's about finding the right agents, the right loan officers, the right property managers, the right handyman, the right contractors, the right bookkeeper, the right CPA, the right support staff, and all the other people you'll need to teach you what to do, help you find the best deals, and smooth out the bumpy road that is real estate investing. So, when I put together my team in 2023, I'll be looking for rock stars. I always say rock stars know rock stars. So, if I find a really good agent, they are likely to use a really good loan officer, and that person is likely to use a really good CPA, and so on. I like to think more about what I do. So, when I add the last pieces to my portfolio, I'll go to meetups, spend time in forums, and pay attention to what other people are doing. I'll find out where it makes sense to invest and what kinds of assets work. I'm going to look for people who are really good at what they do, but they don't have unlimited money so they can't buy every house. They'll be happy to tell me what they're doing, why it's working, and how I can do it too. I really want to make sure that doesn't ever happen to me, so I try to buy real estate in a way that keeps that from happening. I talk a lot about building a financial fortress so that your portfolio will stand the test of time and not just be a cheap, flimsy skyscraper that you build quickly but then falls apart when the market crashes. I hope you're doing the same thing going into 2023. We really appreciate you watching this video. Tell me in the comments below. What will you do in 2023 to add to or grow your portfolio? Thank you a lot.